Apple, let's do a full review on Apple, where I see the price going. This is done before the earnings. We'll do another review after the earnings and compare the two videos. We'll see which way it went. So in this video, I'm going to show you the balance sheet of Apple. I'm going to show you the insider trading, who's buying, what I expect from the earnings. Is it overvalued? Should you be buying it before the earnings? At the making of this video, it was done 2 hours, about an hour before the earnings is released. So we'll do it again afterwards tomorrow and see how it compares. We're also going to look at the margin of the company. Is it increasing, decreasing, insider trading, all the rest of it. And it's been made during a live show. So my members, if they do a super chat, can actually ask a question in the live show and it'll appear in this video. So later on when you watch this, if you're watching it now, of course, the questions will appear on the screen. It will read it out, and you too can do that if you watch me on a live show in the making of a video. Right, Apple, it reports tonight. Should we be buying Apple tonight? I've been in Apple before, made lots of money from Apple, currently out of Apple. And let's see if I'm right. If I'm right, and tomorrow I get an opportunity to buy back, I will. I've got an allocation of perhaps $10,000 to buy Apple if I wanted to do it. Let's see. So if it's your very first time here and you want to be made aware of my breaking news videos, I do lots of videos just for the members, and click subscribe or ring the bell and tap the like button if you want to share this video out to more people. More people will see it, and then by liking the video, most importantly, it will benefit you because it will actually alert you to when I'm actually doing videos because you liked the previous video. That's how it works. Right, let's have a little look. We don't need to cover what Apple is. We all know what Apple is, so we don't need to review the stock and that kind of thing. But what we will do is go do a back test comparing the S&P and look at the financials for Apple. So we're not going to do the basic information of what the company is. I think everyone pretty much knows what Apple is. Anyway, let's go straight over to our sheet over here and take a closer look at this. So what we're looking at right now is the Apple financials. Is it a good value to buy right now? Well, if we go on the best case scenario, everything going great in the world. Oh, Lance Strength.
Lance Strength has become a member.
Thank you very much indeed, Lance. You'll get lots of benefits of being a member, and I'll come back to you and give you your perks and benefits at the end of making of this video. Overvaluation. Overvaluation by 1%. Now, let's clarify what that means. If everything in the world was perfect, which it isn't, the price where it is now, you are paying too much by 1%. Bearing in mind, it's gone up today by a couple of percent, so it's even worse, about 3% overvaluation. However, you're always going to pay more for a blue chip company that has a great balance sheet, a great history, a great belief of the future. But what the stock did in the past does not guarantee what it's going to go and do in the future. Imagine when the iPhone first came out, nobody had one. Everybody has one now. So it's not like everyone's going to go out tomorrow and buy a new iPhone. Not everybody. Some people will. I've got several. We all have. I get it. But it's not going to grow the way it did originally. So don't always assume that a stock, because it's at a great past, will always have a great future. That's why we need to do the work and study the balance sheet and look at it. So it's overvalued at the best case. The base case, which is regarded as the safe measure, is actually still overvalued by 27%. In fact, now 30%, because I say we've gone up today a couple of percent. The worst case scenario, if we value it $100, it's still overvaluation by overvaluation and overvaluation 40%. Right. So we can see how the stock is overvalued. We are probably in a base case right now, overvalued from that point of view. Now, we need to understand, though, that Apple will always trade higher than value. Why? Because it's regarded as an extreme growth stock. It's got stability. It's got a good balance sheet. It's likely to do well. The street likes it. They understand what it is, and so on and so forth. So at the end of the day, you're going to pay more. But I, as a value investor, I am looking to buy good stocks, good companies, not stock prices, good companies. I'm consistently beating the market, and I'm consistently beating Warren Buffett. You've seen my portfolio, started at 5,000, 2.5 years later, I'm now at 52,000, right? I don't do options trading. I just buy the companies. I don't short the stocks either, so never make any money that way. So the valuation isn't great. However, you're always going to pay more. Now, for a high growth stock like Apple, I am prepared to pay up to 25% base, because I understand things like Tesla, things like Apple, Virgin Galactic, you're paying way more than the value today because it's a company for the future. Palantir, it's a huge example of that. So that's fair enough. Anyway, Wall Street see 13% in this stock. Relative value is down 14%. DCF is down 41%. Intrinsic value down 27%. This is all not good. Exceptional return on equity, 128% on the last 3 years, of course. So it's had a good history. But we just need to get, there's no doubt, we all know that Apple is a good company, but we're not just going to pay anything for any price any day. That doesn't make any sense. That's not how to invest. That's how to speculate and gamble. And this channel is not about speculating and gambling, as you all know. Right, let's move up. Look at the valuation history. As we can see, the valuation was pretty good here around this period, January the 5th. Well, we know January the 5th was the beginning of the bull market. I called it in December until the bull market had started. The banks at Bank of America famously declared it 6 months later after 2 quarters. They never take risk. They have to wait 2 quarters because banks are responsible, right? Well, I knew that we'd started a bull market, and I made many videos in December saying the bull market has begun. So this was the time to buy, and this is when I bought it, and I sold it here. All right, overvaluation. I sold it, took my profit. Thank you very much indeed. But this was the time to buy it. This is where we want to buy it. Right now, then we've got the earnings tonight. I can allocate $10,000, and if we drop on earnings, it's always a good time to get into a stock or trade a stock. Then I could suddenly jump in if we get a nice little drop around 125. I certainly would. If we had a drop to 125, I would probably buy 10 grand tonight. Anyway, the fundamentals though. Fundamentals, we're going to come on to inside trading in a minute. Fundamentals is very, very important because as we can see here, the revenue is 384 billion. Pretty good. Down 3% at the moment though. We've seen... if we look here, September the 23rd, we were 394. December, this is back in 22. Then we had December the 30th, we dropped off 388. Then we're at 385, March the 31st, and June the 30th, 384. And now we're going to estimated profits, which is what we're looking at tonight, of course. This is what the earnings is all about. So the street are estimating that they're doing well and they're doing better. I don't know. That's what we're going to find out. That's what the street thinks. The operating income is down 0.1%. The net income, 94.8 billion, is up 5%. Their net income is good. All right, cash flows up 3%, looking good. Capital expenditure, we're investing, it's down 0.1%. That's good. They're spending less on investing. That's good. 101 billion on free cash flow. That's up 4%. Nice. Obviously good to reinvest. Let's move down. What does the balance sheet look like? This is something a lot of people don't really care for, but you should take your time to look at the balance sheet. This will tell you how healthy the company is. The company's balance sheet right now is 335 billion. Very nice indeed. The liabilities, 275 billion. So we are in a good position. Current assets, 123 billion. Cash and short-term investments, 62. We get a good impression here of the balance sheet of the balance of the company. Liabilities, as you can see, current liabilities, 125 billion. Accounts payable, 46.7 billion. So on and so forth. So overall, though, we're in a green state. We're in a good side of the business. We've got more money in than is going out. The balance sheet looks good. Now, efficiency. What we're looking for is we want to look forward to see future margins increasing, not decreasing. With the dominance of the company, we want to see how it improves on its margins as it crushes the competition. That's what we're kind of looking for. So what we're looking for now is the efficiency of the company. Doesn't matter how much money it's got. If it doesn't operate efficiently, then it's not a great company, right? Well, Apple is a great company. 43% gross margin. So they could sell this bloody thing, right? They could sell this for half price, all right, which is what they need to do, really, which would be nice. 43% margin. The margins have increased. 10 years ago, it was 40%. 7 years ago, 40%, 40%. And now we're coming up to 43. It's its best ever margins. It's increasing on margin. That's a good sign. That's why Wall Street has given and certain analysts today have given an up rating to the stock. However, analysts aren't always as fair and as honest as they should be. My channel is here to be the most honest, real channel on YouTube TV. I'm not a YouTube channel selling videos. I'm a YouTube TV show. This is a whole TV studio, and everything I do here is to demonstrate the honesty and openness and integrity of this channel and what we are doing for the members and the audience. It's not about me selling videos. It's got nothing to do with that. It's why we're 99% of the time members only. I don't need a big audience. I need the best audience. Operating margins, 29%, net margin, 25%, and generally increasing. FCF margin 26%, return on equity 160%. They're taking their cash and reinvesting. That's very, very good, and that's increasing. It would do. Interest rates are going up. They're making more money now on their invested cash. 28% return, 41% ROIC and ROCE 54%. All of this is looking very, very nice. Okay, the fundamental score. Now, this is important. Again, I prepared this for you. So you need to, if you're going to overpay for a stock like Apple, boy, it better have a good profitability and solvency score, because you are buying a future price. If you buy Apple today, if I buy it today for $10,000 at 177, I am buying it knowing that I'm overpaying and the price will grow into the stock price I've just paid for it. So it has to have not a red or an amber, most certainly a strong green above 80%. 81% profitability. Apple make a lot of money. Their margins are off the scale. Their solvency score is fantastic. They have a bit of debt. We don't like that. If we didn't have as much debt as we do today, with interest rates the way they are, we'd probably have a 90 solvency score. But because we have debt, it is manageable, it is comfortable, it's not too much. We can allow a 70% score on that. Now then, moving on, price targets. Let's look at the price targets. How do we think on the price target? Well, the price target set by Wall Street. Again, Wall Street are investors. Wall Street are traders, in and out. They don't hang around. They don't care what's coming tomorrow. They want to only be in a stock if they think it's moving. Analysts at Wall Street are very biased. I don't use that as guidance to buy anything, and neither should you. You should be reading this information here that I'm presenting to you today. Apple's lowest forecast of $150 would be 15% downside. Average forecast $201. We've got a 14% upswing. 14%. Now then, there is the point of overvaluation. If you were going to buy Apple right now, $201, which is the likely outcome, is a 14% upside. That's not good enough for me to overpay for a stock. If I'm overpaying for a stock, which I am by buying Apple, I'm not doing it for 14%. Too many people buy a stock because they like it. I like Apple. I'm buying Apple. It's great. I want to buy Apple because I like Apple. And Warren Buffett owns Apple. Yeah, but Warren Buffett didn't pay this amount of money for Apple. So it doesn't matter how good it is. I love a can of Coke. I buy cans of Coke from Walmart. At least Leah does. She buys the Coke for like 80, 90 cents a can in a big pack. Makes sense. Do I spend $10 on a can of Coke? No. Don't care how nice the can of Coke is over ice and lemon in a nice chilled glass. I've got one of these glasses. Look, I like my Coke in one of these. Doesn't make any sense, does it? Right? Well, there's the same thing. Apple makes no sense if you're paying over the odds and you've got a 14% upswing. It's not that Apple's not a great company, but it's too expensive. It's not going to give me enough money. Now, if you say it's going to go to $252, which is the highest forecast, which is always exaggerated, 42%. 42%? Sound good? Not when you compare it. Not when I compare it to Enphase Energy. Not when I compare it to Virgin Galactic. Not when I compare it to Tesla. Not when I compare it to J&J because it's been beaten up because of litigation. Not when I compare it to Coca-Cola because of the massive drop because of the price of sugar. There are other companies I can earn more. So this is not a good chart for me. You might like it and go, I don't care. Well, I'm here to make money consistently and beat the market. I'm not here just to buy anything just because it sounds good. Let's scroll down, go past the competition a minute. We're not really interested in that because Apple doesn't really have any competition, does it? This is what you need to look at. Insider trading. Very, very important. 9th of October, only 3 weeks ago. Senior Vice President, Senior Vice President, CFO, Chief Financial Officer, the finance officer sold 5.7 million. I bet they wish they didn't have these figures come out, but we got them here. 5.7 million's worth of Apple. It's a lot, right? Is it a lot? Does it look a lot to you? No. Do you know how many shares he owns? A heck of a lot more than that. He probably sold that many for tax purposes. Doesn't mean the company's in trouble and I'm selling off all my shares and I think it's going to go down and I'm influencing the stock. I'm an inside trader, blah, blah, blah. If you use this metric, you have to understand how many shares he had in the first place. I haven't got that figure to hand. I'm not looking at it. I'm not presenting that figure on the screen to you right now, but I happen to know it's a lot higher than that. This is a tax position. That's all. This is not a disbelief in the company. So 5 million shares for him is not a lot. Anyway, so however, we have seen some selling. We're not seeing insiders buy. We want to see people inside the company buying. They're not going to, because the company is not beat up. It's not on its arse. It's not cheap. It's not got massive growth in it. Why would Tim Cook, good morning, why would, sorry about that, but why would Tim Cook buy millions of shares of Apple when it's at a virtual all-time high? Why would he do that? He has shares that cost him probably 1 cent. I don't know. The point is, it doesn't make you think there's a huge bounce around the corner, because there ain't. That's just the way it is. So there's my full review of Apple. Second time of doing it. This the first time was rubbish. Anyway, there we go. Apple. I hope that makes sense. We're going to do one final thing. And one final thing, which is really important, just as we come up to the Apple earnings in just a few moments. We're going to do one final thing for you. And we're going to do a back test. We're going to do a back test to the most stable asset in the world, the S&P 500. How does it compare? How does it compare to the S&P 500? Well, if you put $10,000 into the S&P and you put $10,000 into Apple when Apple was first available publicly, 2011, the red line is the S&P and the blue line is Apple. $42,000 in the S&P, 4x. $174,000 in Apple. Pretty good, right? But you may notice that the growth that we've had in the last few years is comparable with the S&P. It exploded at the beginning, had some real gains, but the last couple of years it's comparable. So, is Apple a buy today? Should you be buying Apple before the earnings? If you are an investor that wants to consistently make money, not lose money, not overpay, not get carried away, not get excited, just buy solid companies, should you be buying Apple today? No. No, you shouldn't. You should have bought it 20, 30 years ago. And that's fine. That's why Tim Cook is not buying it today. Good morning, good morning. Sorry, I know it's twice. So no, I am going to wait for the earnings. The earnings is going to be, I'm expecting, if not this earnings, the next earnings, a downtrend. For the very first time, we are seeing Apple reduce the price of its products. Remember, what you've just seen is past prices, not future prices. The future prices are based upon the past. That's what analysts do. It's not what I do. When I invest in a company, not only do I study the balance sheet, the numbers, the history, I also make friends on the ground. I have astronauts at Virgin Galactic. I have the world's biggest retail investors follow my show for Virgin Galactic. I'm inviting CEOs and companies to come onto my show as my guest. I make friends. I talk to them via X account and Instagram. And I get a picture of the thank you, Leah. I've got a coffee behind me. And I am looking, or it's probably a latte actually. And I'm looking for where the company's going, not where it's been. And if you look closely at Apple, deflation. We are seeing some products now be reduced in price. Their margins are going to get squeezed. So if I'm buying a company at a prime price and I'm paying a top price and I see margins coming down and I see a 14% at a base case using my software that I've just prepared there for you, does that make any sense? No, it doesn't. I can make more money on many other stocks. So as an investor, it's a no from me. As a gambler, someone who just goes, I'm in the stock market and I'm going to buy Apple because I've been told it's good. And then you're probably likely to lose money. So that's my review today. I hope you like it. If you are a member of my channel, you'll receive extra information sent through to you via my newsletter. Also, exclusive content I only post to members, exclusive live streams and stuff like that. Anyway, if you want to see the earnings for Apple, click above my head. If you want to see what I'm buying before I'm buying it and selling before I sell it, see my X account. Also, click above my head and below in the description of the video, you'll also see how you can subscribe to my newsletter as well, martynlucas.com. And over here, you will see the earnings for Apple. We'll do this again in a couple of days' time, and we'll see if I was right and see how the earnings is being compressed, or at least the projection of what we will get on the next earnings. It's not about tonight. It's about the next earnings and the next earnings. It's like playing chess. If I'm going to move, what's my next 5 moves? Don't just move one and then go, now what do I do? That's called reactionary. We want to be proactive, not reactionary. We want to control the narrative, not follow it. Until next time, as always, take care of your money, take care of yourselves, your crypto, most importantly, take care of each other.